Hi, I'm Grant Steven.
And I'm Kris Bernier.
And we're the two investment guys. This week, Kris and I are going to talk a little bit about the earnings picture. Just before we get to that, when we look at the markets around the world, we're off roughly 5% from the highs. Most markets, major markets, are still in positive territory, and some are well into positive territory. Getting a bit of a mixed bag from some of the macro signals. For instance, China and the slowing or moderating of some of the economic growth there. The euro debt issue, Kris, which never seems to go away, and you and I have said for a long time that's not going to go away for a long time. They're all going to take different turns on the headline there. And right now, of course, with Spanish bond yields nearing that 6% mark, that's a danger zone there. And now the latest is the French elections, maybe moving away from that more conservative posture and away from the austerity that's required. So that could be a bit of a problem. But, the U.S. economic growth story is improving. And as we said the last couple times out, the trending is more positive than it's been. So again, a mixed bag, and the market's kind of struggling with that. So we wanted to talk a little bit more about the earnings and some of the things we're seeing there.
Sure. Well, some of those headlines, Grant, they certainly are dominant and fuel the fear factor out there, but earnings is what really drives stock prices. If we look at the forecast earnings here we're just in the early stages of the first quarter for Canada, we need to remember about 80% of our earnings overall are generated from financials, energy, and materials. Financials representing about 37% of that. Now overall, we expect flat sequential earnings and up about 4% from the same quarter in the previous year. We don't expect to see much of a positive surprise out of anything. And in fact, with dampening of commodity prices, energy and base metals, precious metals, probably we'll see a bit of disappointment or downtrends there, but the one positive surprise may come out of financials.
Yeah. Kris, so that's an interesting story in Canada because we're sort of sticks, rocks, oil, and gas, except the financial sector makes up a really big chunk of that and really drives the day. If we turn to the U.S., a little bit different story there. What we have is it's early stage here on Q1 reporting, but about an 80% beat so far. I wouldn't read too much into that. The expectations have been lowered. We've talked about this before. What they do is ratchet down the street expectations and then beat it, and it counts as a beat. So everyone's supposed to run out and rejoice that that's a great thing. And it is. We're still talking about earnings growth here. If we look at Q4, which we just came off of, the average of the whole group was about a 2% miss to consensus. And what we're thinking now is Q1 overall is probably going to be a beat. Again, lowered expectations. The macro data has been improving there. We're waiting for a Q1 GDP number, which could provide a little bit of accelerant to some of this. And the potential down there is double digit in some areas, such as industrials, tech for sure, and some healthcare. So not a bad picture down there overall, but I think we need to step back and say this is moderating a bit.
Sure, absolutely, and that's nothing different than what we've been talking about all along. It's slower growth for longer. There's going to be short-term periods of acceleration and short-term pullback periods, some of that with some seasonal factors in there. But one thing to remember is make sure you're focusing on yield. Growth becomes a little less important then. You're getting some income, you're getting paid to wait. I want to thank you again for your questions and comments. Please keep them coming. You can contact Grant and I at twoinvestmentguys.com.
Join us again next time where we're going to pick up on the earnings. We'll have a little bit better overall wrap on it. So until then, I'm Grant.
And I'm Kris.
And we're the two investment guys.